3. Testing 1, 2, 3. Testing 1, 2, 3. Testing. Testing. Can you hear me?
Yeah.
Okay, good. We're going to go live in a minute or so. I'm just experiencing some technical difficulties, but I think we've resolved them. Let's see. All right, we're ready to go. We are ready to go. So, let's go. All right. Well, I thought it would be fun to talk a little bit about gold and some thoughts about gold. During last year, 2020, we had a pretty heavy position in gold in our global asset allocation strategy. And we reduced that position a bit and moved that money into the equity markets, into the stock markets, particularly US. So the question really now is that where does gold fit in to a investment strategy, at this point? And what I would say is that we've done some thinking about it and asking the question where gold could go. So I'm going to share my screen and I'm going to go through some things. First of all, let's see. Hopefully you can see a screen that says Gold Outlook in 2021. Can you see that screen? Hopefully you can. So now let's look at this for just a bit. First of all, for those people that don't know me, I've been studying, teaching, and working in finance as well as investing for 35 years. 300 plus podcast interviews about investment mistakes has given me a unique perspective on risk management. Also, yes, I live with my mother in Bangkok. That's us at a Christmas party, and some of our interns in the background. And it's top secret who that little girl is. You can guess in the comments section. So, someone was talking about this question. So, gold is at 1860 right now. What's your outlook for 2021? So, gold in 2021, where could it go? Well, did some research looking at it, and I'm going to walk you through some of that research right now. So the first thing is that as gold surpassed 2,000 recently, many have raised their 12-month gold targets from up to 2,000 up to 3,000. And some gold bugs, people who are really obsessed with gold, are talking about 5,000 to 25,000. Of course, those predictions include some sort of collapse in the US monetary system, maybe a return to some form of gold standard. So let's look at it a little bit to try to think about it. The first way we could do that is we can go back and look at the gold price movement after the financial crisis of 2008. And we can use this previous crisis as an indicator of how the gold price could develop during the current crisis caused by the pandemic and the government's actions. So here you can see the first, let's just talk about the lines here. So the S&P is the red line. You can see it racing up, particularly recently, but a lot more volatile. And you can see gold price is the blue line. And gold price at 797 was kind of the point that it was at in 2007, when we were kind of at the peak of the S&P. Then the S&P crashed with the 2008 crisis, and gold just steadily rose. In fact, gold rose, you can see that black arrow, gold rose all the way up to 129% above where it was when the market was at its peak. So gold did a very good job at holding value and increasing value during that crisis. Now, there was a part of time where gold was actually just perfectly correlated with the equity market, but generally gold did a pretty good job. So if 129% were to repeat from today's crisis, gold could go up by up to as much as $4,400 per ounce, and that's the black line all the way over to the right. Now this chart is rebased to 100. So S&P is at 100 at the beginning of it, and gold is at 100 at the beginning of it. So there we can see that you could argue, in fact, you could argue that the S&P may come crashing down, and that's when the gold price is going to really rise. So that's related to the stock market. But what about the money supply? So a second price approach would be to look at that and consider gold as an inflation hedge and not so much a protection. So what you can see is that, you can look at gold in a few different ways. One of the ways that we just looked at it is some protection when the market's kind of crashing. And another way we can look at gold is that it is protection if currencies start falling apart or if inflation starts to rise. So let's look at that in a little bit more detail and say it's an inflation hedge, right? And should compensate investors for increases in the money supply. So in the past, we've seen a pretty strong correlation. When money supply grows by a certain percentage, we would expect gold to increase by maybe a similar amount or something like that, maybe not 1 for 1, but there should be some correlation there. So now let's look at this chart. And this chart shows the price of gold being the blue line and then the M2 money supply. So what we can see is that the money supply did increase in 2011, but what we can see is that increase recently basically is this current injection of money that the Fed's done. Now the chart says December 8, 2018, but actually it's further along. It's actually 2020. So basically gold peaked in August 11 at 1826. And since then, the US money supply has increased by about almost 100%, 94%. So if we assume some sort of increase of that magnitude, we could end up at maybe 3,500 as a potential. So definitely there's more, it appears as though there's more upside for gold. Now, if gold price acts like it did in the past, it could pass 3,000. Previous all-time high have been set when investors lose trust in the system. For gold to gain another 50%, there needs to be some sort of catalyst that makes investors believe it's the end of the financial system or expect very high inflation. And finally, what have we learned? What are the key points? Well, gold passing 3,000 is fully possible, and a catalyst would probably be needed to reach those levels, but gold doesn't appear expensive in current levels compared to what we've seen in the past. So what's the bottom line? Maintain gold allocation, but wait for the risk off trade to increase further. So right now we've been riding the equity markets. Particularly in the US, because of injections of liquidity and the assumption that the new Fed coming in and the new government coming in America is going to want to push the economy and the overall market. So there's those are some thoughts on gold. I know that some of you have talked about allocating to gold. Some of you have allocated to gold. I think it's important to remember that over many, many years, gold has never been a great appreciator. It doesn't go up that much. But during times of crisis, it can really protect your investment. So this is just a little bit of thinking about gold right now. And if you have any questions, feel free to ask in the groups and on the channels. I'm happy to talk more about that. And if you had a subject that you'd like to talk about or you'd like to see me go through, just let me know and we'll go through it. All right. Have a great day.